Well, thanks to all of you joining us for the Finance and Insurance Committee meeting, and for the owners who are joining as well. So, Scott, the agenda. Can you bring up the agenda?
I don't, this laptop we have doesn't support PDF or,
Oh, okay. Well, the agenda is simple. The roll call. So I'll start with that. Sandra,
Yep.
Barbara,
Here.
Scott,
here.
and yours truly, Mike Sisto. So great to be here.
Katina's there. I
Oh,
see her.
Katina joined. Katina,
Yeah,
you there?
I think her mic is not on, but I see her name on the screen there.
Hi, I'm
There.
here.
Bye. Okay, great. So now we have more than quorum. So thanks for joining us all. So the agenda is quite straightforward. There are three items. One will review the treasurer's report for the month of May. The second item on the agenda is Sandra is going to provide us a banking update and line of credit. There's a lot of good work that's been done there, so we'd like to share that and share with the people on the call what we're doing in terms of treasury management. And third but not least, the reserve study way forward, where we're at, and more importantly, where we're going. And of course, after each section, we'll ask owners for comments or questions they may have. Anything else before I move on?
No.
Okay, so I'll share my screen. I'll bring up the treasurer's report. Do you guys see an Excel sheet there?
Yep.
Okay, great. So this is for May year to date. And if I look at total revenues for the first 5 months, we're at almost $3 million, 2,997, which is pretty close to the budget, which was 2,950. The difference is 47,000, of which 38,000 of that is made up of interest income, which is greater than budget. And the comments on the right indicate that we received our interest payment or interest revenue in February, and the budget is timed evenly over the course of the year. So there's going to be some peaks and valleys, but so far we're trending pretty close to that. On the expense side, our total operating expenses are 1.992. Budget is 2,026,000. We're favorable by 33,000. And you can see if you run down the list, pretty much all the categories except one we're showing improvements compared to budget. Salaries are 13,000. The insurance is unfavorable by 19,000, but that's going to be adjusted now that we have the new premiums in, and those kick in starting with June. Contracts, utilities are all favorable. Repairs and maintenance. The one that's off is legal and litigation fees, and that's been an ongoing trend. I hope, not I hope that the bulk of the spending is behind us, but I don't know. So, this requires it. I put in my comments, requires attention from both the management, the finance committee, the board, and the owners. And we should avoid any litigation that is unnecessary, obviously. So I'm going to keep putting it on the report and draw attention to it every month. Any comments or questions before I move on to the balance sheet?
I have a question with respect to the legal. I know there's only so far it can be answered, but I'm going to ask the question moving forward. It's a moving forward question, Scott. Do you see that we are using the attorneys less now that the new board is comfortable, and that things are just on hold right now? Is that where we're at, so that the legal fees aren't going to creep up more than or give us a surprise?
For the litigation, yeah. I mean, they're down compared to last year
Okay.
because it's a lot of waiting around right now for next steps.
And so, in that light, then would you attribute the bulk of the legal fees to review of contracts? contract questions and things like that?
Yes, correct.
Okay.
Yep.
All right.
Okay, thanks. If we move to the balance sheet, you see the top three items are the cash positions for both the operations, special assessments, and SERS and non-SERS. The total of those is 11.3 million. If you look at the operating cash, we're liquidity of 3 months. Our target usually is to have 3 months of cash. Of course, that fluctuates depending on when the quarterly payments and maintenance fees are received and depleted. So our total assets are 12.4 million. And you can see what the liabilities are in terms of insurance payable, deferred revenues, which are the prepaid assessments and revenues. So this being May, that means that the month of June is 1 month of prepaid assessments on our books. Accounts payables, accrued expenses, and then the three significant categories are the special assessment fund, the SERS reserve fund, and the non-SERS. And I'll get to those. But at the end of the day, we have equity of 494,000, and balance sheet is quite solid. And what prompted the committee and specifically Sandra to look at, and Katina, I think as well, to look at some of this was the cash position. How can we better manage that? How can we even earn more revenue? And how do we look at a line of credit in case it's required? We'll go to the third tab, and all this information, by the way, is on Building Links, so you can look at it at your leisure and come to the meetings if you like with further questions or comments. Any questions on the balance sheet before I move on to the reserve funds?
No.
Nope.
Right. So this schedule here is really a summary, a snapshot of where we stand in the three category of reserve funds we had. We had the special assessment, which was assessed a few years ago, and that was really to cover the concrete restoration, the elevators and the roof, plus some project management, engineering, and administration fees. If we look at that, we assessed a total of 10 million. The current spending is 7.8, and the most significant item that remains is the roof. We've spent 385. The contract is for 1.6, almost 1.6. So if we make that budget, we should have a surplus here of between 800,000 and 1 million, which we can definitely use for other activities. I think it may require a member's vote to transfer from this fund, but that's good news. And I think I heard that there's a settlement that was reached on the elevator. If there was, then we should have a few 100,000 there. And Scott, do you want to comment on that?
Yes, so we put in for a deduct change order from for all the liquidated damages from TKE for being late on their contract completion date. I forget the exact amount of days. I think it was 455 days they were late before final completion was called. So we got the liquidated damages on that. And we also got TKE to cover the legal expenses that the association spent on TKE. And I'm sorry.
The re-inspections.
Yes, correct. Thank you, Alex. The re-inspections from our elevator consultant. So
Okay.
all those adding up, our final invoice is going to be somewhere around the $38,000 neighborhood rather than 280,000.
Yeah, so if we look at this, to date, we've spent 2.536. If you add another 30 or 40,000, you're just under 2.6. So we should save against the budget almost a couple of 100,000, right?
Yep.
Okay, and I think Alex, you were involved in some of these discussions and negotiations, so thanks for your contributions to this.
Okay.
If we look at SERS, we're sitting with a balance of 6.1 million. and non-CERS 1.7, almost 1.8 million. So we're in good position as we speak, but there's some significant activities and projects that are going to come our way in the next year or two. So part of the reason for updating our reserve study is to get a better grip on the useful lifespan of some of our assets and also what the latest costs may be. And that will, that's one input into the whole budget process, and we'll use that. And I think, Katina, you've put together a cash flow analysis as well. So we'll use that as a sounding board when we get the reserve study information and really do a check and balance. Any comments or questions, Steve? Okay, so with that, I'll hand it over to Sandra, and you can talk about all the good stuff that's happening on the banking side.
Okay, so we had a call with Pamela, who's with First Service and handles cash management. So Pamela was on the call, and we had Heskey, Scott, I believe, and Katina. So just to kind of go over our accounts, where the money is invested, how much we're earning, whether, try to really maximize the return that we're getting on our funds. And, keeping in mind that, there's really 4 categories of fund. We have our operating funds, which are, maintained separately. Then we have our CERS funds, the reserves for CERS, the reserves for non-CERS, and then the special assessments. And all these funds are kept separately so we can track the interest, which is recorded differently. So we had a good conversation, kind of went over how much cash, where it is, and how could we better improve the return on the funds. And as a result of the call, we ended up making some changes, opening a couple accounts with Morgan Stanley, investing some of the funds in certificates of deposit rather than money market, trying to earn a better return. So we had a few, we had a to-do list once we ended with the call, and I'm not sure where we are in making those changes. Scott, are you handling that, or who I guess Heskey, is Heskey on the phone? No. So I think he said something. He wasn't sure where that was at. Scott, do you know?
No, I'll find out.
No.
I don't have the ability to open CDs or anything. So that's got to go through like Pamela. So let me follow up with her. And
So she's the one, because we had 2 accounts at Morgan Stanley that needed to be opened.
Pamela,
One for non-CERS and one for the special assessment account.
Yeah.
So I don't know. So she would initiate that.
yeah.
So maybe, follow up, because Heskey said something. I sent him something, and he said, I don't think he's seen anything.
Yeah.
So
Pamela was,
she sent a whole email.
yeah,
She was
Pamela
on.
was supposed to get the paperwork.
Yeah.
Yeah. Can you hear me? Okay.
Yes.
Pamela was supposed to get the papers ready to open the accounts, and then Heskey was going to get the signers on,
Right.
bring it to the board and have the signers. And then they were going to move. So, yeah, Scott, if you can follow up and see what she said with that.
Yeah, because then there was monies to be transferred. And who
Yeah.
would initiate the transfers once that's open? Scott, is that you, or is that you initiate and Heskey signs, or how does that work?
It depends what we're transferring. If we're going into Morgan Stanley, that's going to be basically all Heskey paperwork.
Yep.
CDs would be Erica with First Service, and then the simple operating transfer that we were looking to do on a monthly basis, that would be me.
So I guess with all the assessments that have come in, are you kind of monitoring the cash balance? Because now we're in the high of the funds. I would assume we've got a lot sitting in the account already, right?
Yeah, so this is the first month of the quarter.
Yep.
So this is when we're going to have that highest amount in the operating account. And
Yeah.
it's gonna be the first couple quarters, it's gonna kind of be, I don't want to use the term guess and test,
Yes,
but it's gonna be, let me start off with this amount first, because we do have some high dollar invoices at the end of every month, like a $31,000 hot wire bill, and depending on
Yeah.
where a $55,000 payroll bill expense.
yep, and
is
the
due.
insurance
So-
and all of that, yeah.
Correct, yeah, our
be-
$81,000 insurance bill comes out on the 28th of every month.
Yeah,
So it's just kind of figuring that stuff out, to see how much I can really transfer the first month of the quarter.
but I mean, as soon as you're over 500,000, I would say you're safe to, to move, because that's about what we spend in a month, I think, about 500. So, I mean, you got to be over 1 million right now. So, I mean, I would at least,
Yeah, I was looking before our meeting, we're like right at a little bit above 1 million.
yep,
That we've collected this month, and there's still like 400,000 left to
coming in,
collect.
yeah,
And
yeah.
yeah, because our documents allow like a 15-day grace period
Yep,
without penalty,
of
it
course.
scans throughout those first 15 days of when
Yeah.
we collect. So I
Understood.
did put in a transfer for 700,000.
Perfect. Okay, good.
Yeah,
Good.
that's good.
Yeah.
Okay. So understood. No, I mean, we'll have to kind of see how it goes, but at least you've got
Yeah.
something going over there. So that's good.
Yeah.
Okay.
Good.
Okay.
Yeah,
So
we said we were, summary, we had a summary, was going to move out of the operating fund, and it was going to go into a long-term CD, a 6-month CD, because we said 500,000 was the equity that we have, and that
Three-
money is never going to be used.
350 is the equity.
350, we said,
Yeah.
okay.
Yeah.
So, and anyway, we probably should look again at the schedule, talk to Pamela and see if she started the paperwork.
Yeah.
In the meantime, watch it. You're right, as Scott said, for the first couple months, maybe do a cash flow analysis that kind of tells us when the payments are, and then write a process that says, okay, every Thursday we do this, either transfer in or out. So that way it's a scheduled thing.
Yeah. But I mean, Scott, I assume you have visibility about payments coming up, right? I mean, I'm sure some of this is probably sitting in payables, is it? Or are you able to kind of look out a week if you look in the system, or no?
I mean, so I can run reports from the past and see when,
Sure.
certain invoices came, such as, our utilities and
Yeah.
that type of stuff. I mean, I kind of have all that memorized by by
You
now.
know, the big stuff. That's it.
Yeah.
And without killing yourself. I mean, we don't need to be like, but at
Yeah.
least we get close enough.
Yeah.
So okay. So that's the cash. I think
But I just have a question, Sandra. So it's great work. I'm glad that we're doing cash management because why leave money idly sitting in accounts?
right.
And I thought I read in the emails as I went through it. I looked at it from my perspective that there was a potential or an upside to interest revenue.
Yeah.
Yeah.
But I guess they figured about 35,000 a
That's-
year is
yeah.
what.
Yeah.
But with that doesn't even take into account what Scott is doing.
Okay.
So,
So
the
it's
transfer.
even more than that.
Scott-
Okay.
So, yeah, so that's going to be in addition to the 35,000. So, I mean, potentially that could be some, a nice amount of extra money. coming
Well,
in.
having said that, then it's worth time spending. It's worth the
Yes.
time we spend.
Oh,
on it,
yeah.
for sure.
Yes.
No question.
Yes.
Good work, Katina, Sandra, Heskey's not here, and Pamela and Scott. So thank you.
Yep. Very good. So that's on the cash. And then I guess on the line of credit, which, we've been looking at, how much it would cost. We were looking at a $2 million line of credit for emergencies not to be used. And that would be in the case of a, say, hurricane, in light of the very large deductible that we have on our, wind claims, if there was one. So we looked at, getting a 2 million line of credit. And for reference, we did have one from March 2023 through March 2025. We had a line of credit. It expired. We didn't really, pursue that because we were changing banks and first service and all that. So now we went back and we got some kind of indication as to how much it would cost. And the terms are actually more favorable on this line that the terms that they're currently giving us, because I looked at what we had before. The one we had before was prime plus 1%. This line would be at prime only. So it's a 1% less. The one thing is that it has a floor at 6.5%. So even if prime was going down to 4, we would be at 6.5, but our other line was at 8.75%. So that's and again, let's keep in mind, this is not to be used. So the interest rate would be an emergency interest rate. That would be, let's use it, figure out what we're going to do next if we were ever to use the line, and then do a special assessment or whichever, way we choose to do it. So it's not for a long-term borrowing. It would be for a short-term borrowing. So, for me, and talking with First Service, I mean, this is something that a lot of associations have, an emergency line. The cost this year would be approximately about $13,000 to get the line in place with the collateral, sign and all that. And the line is renewable every year for $1,500. So there's an upfront cost of about $13,000. I view this as an insurance kind of, amount. If that's
Well, the good news, Sandra, is that we're going to save at least 30, 40, 50,000, not save, but generate revenue. So this pays kind for itself, and it gives us, like you say, an insurance policy. When we first started looking at it just for everybody's benefit, I think our cost was north of 20, 30,000 at that time. So the cost of 13 is pretty.
It's pretty good, and it's a one-time cost, and hopefully this line can be renewed every year for $1,500. That's just kind of like a little insurance amount, and then we keep going with this 2 million. And they're only requiring about 250,000 or 500,000 that we would put in reserves with them. And we don't have the name of the bank. It's a bank from Chicago, but if that's something.
Winthrop.
I'm sorry?
It's Winthrop.
Okay, because I asked him this morning and he did not say, so I don't know.
Oh, okay. That's the one he said at our meeting.
Yes, I remember. Yeah, that conversation.
Yeah.
So, if that's something that the board, I guess the next step, I guess let's talk amongst ourselves and see if that's something that we think we should propose. I guess if the board was to approve pursuing this, then we would get an actual term sheet, because from what Jordan said this is the terms that he's seeing right now. But until we go and we say, okay, yes, we'd like to pursue this, the board approves, then we'll see what the final terms would be. So I don't know if that's something that this committee feels that we should pursue. Is this something that you see as having a need, Scott? I don't know what your experience has been with other HOAs. I'm open.
I have a question there, Sandra, on the collateral. You said
yes,
250,000.
We would have. Well, here's the thing: the collateral is
a deposit.
What we do. It's an assignment of assessments. Is really the primary collateral. Is an assignment of assessments. So if we were to borrow, they would get a claim against future assessments. So that's really their collateral. And then they're requiring us to deposit. He did not have the exact amount, 250 to 500,000 with them. And I don't know what the rate is. We would want to probably do, try to earn as much as we're earning. So we would probably take this from the CSRS reserve or something like that, where we have, a lot of excess funds. We would just deposit it there, and then hopefully we can do a CD and earn a pretty good rate of return. But again, until we say, yes, go give us some terms, we don't know exactly, but, we have.
So that balances the cost off of giving them the money, the collateral. by earning them back. So, if we're paying 5,000 to get the line, and we're putting the money in the bank with them, then if it's earning money, then it balances out the cost of getting a line, right?
Well, but we would be earning money where it is now. So it's taking the money from,
One
our
bank.
money market account or Morgan Stanley, a CD at Morgan Stanley, and then moving it to that one bank. They just want to have some cash, I guess, as collateral.
Okay,
So not really giving us anything more. Hopefully it's giving us the same return as what we're currently earning, at Morgan Stanley. So, and that's something that we will need to, be looking at once we have terms.
thank you.
So I don't know, Scott, do you have any comments on this or?
No, I don't think so. I was at the beginning, I was kind of worried about going through First Service for a line of credit because the last property I was at, the fees were a lot higher
Okay.
than what we're paying now. So I'm happy to see that they've come down quite a bit.
We've got, well, we got a friend's rate.
Yeah.
So it's not, and honestly, in retrospect, I think we, if we didn't have them, we would have probably gone to City National. Their terms were not good. And then they're kind of like helping us, then I don't know exactly where we would have gone. We tried, so I think that it helps having them. I think there is some value. Well, I'll say that now. We'll see what the term sheet is. But so far, because they're in the middle of so many of these lines, you would expect them to know who's giving the better terms.
Yeah, and
So I think
and they definitely have found a much favorable rate that we would have found on our own.
Exactly.
So the First Service does use the relationships to get good rates for the clients.
Exactly, and just the interest rate. I mean, we had a line on our own with our former bank when we did not have First Service, and the terms, it was prime plus one. Now we're hopefully getting prime. The origination fee was 5,000 back then, a quarter point. Now the bank fee is 3,500. So we're saving money even on the fees. So on paper right now, it's looking favorable to what we had gotten on our own a couple years ago.
Yeah.
So I think, so let's just see. I'm curious to see an actual term sheet. So, so what does everybody think? Is that something that you guys want to take to the board?
Yes.
Yeah, absolutely.
Yes.
On the gap, this is the side question that is we're getting a line of credit.
Yeah.
Storm, possibility of a storm, but in that storm, there is a gap, deductible that the homeowners have to pay.
Yeah.
Okay, what percentage is that then?
That is 5%. The gap, the first $6 million in damages on a wind storm is ours.
Right. So divided by 370 units, right?
Mm-hmm. Well, plus or minus, because it works with, area. So not everybody pays the same percent.
Right, of course.
Yeah.
Okay, so if I understand correctly, Sandra, the next steps are to get the term sheet.
Right. Well, I guess do we need a board approval first before we go request the term sheet? I think we do because we don't want to get, because they're doing work right now for service.
Yeah.
So I think we need to be ready to go ahead unless the terms are totally not what's on paper right now.
Yeah, what we should do is just get the okay from the board through email.
Right.
Saying, yes, proceed, get the term sheet,
Exactly.
whatever we need. And then eventually it'll have to be approved at a board meeting to get the line of credit.
Right.
Sorry. I gotta plug in my.
Right. Scott, they can ratify it after?
I mean, technically, you're really only supposed to ratify stuff in the event of emergencies. But I mean, it would be simple for us to just call a quick meeting with, the one item on there to approve it.
Right. It's not it's an approval to proceed, if we're all good with the terms. If the terms are totally not what they are in what we're seeing now, then even we might say, you know what, no. So,
Okay, great. So Scott, I guess who's going to write up that email? Was that you, Scott, or Sandra, or?
I'm good with sending it out if that's what you guys want.
Yeah, I think that would be good.
I mean, Scott, do you want to take the last email that we got from Jordan to give them what we're currently looking at?
Yeah, uh-huh.
So, okay.
Yeah, it's okay, much. It's all right. Good boy. Yeah.
Okay, we hear somebody's side conversations here. Maybe you can go on mute. I don't know who that is. Anyway, any comments or questions from the owners on both the line of credit and the bank?
Are you asking in general or with particular to what you just discussed, Mike? Because it's Todd. I apologize for being late. My apologies.
No, it's fine. No, it's on both subjects, what Sandra presented in terms of the banking arrangements we're going forward with and the line of credit.
No, and you might have said this, but I just have one question. The line of credit is for emergencies. Is that correct?
Correct.
Okay. No, I don't have any questions about that.
Okay.
I don't have any questions. I just want to say, first of all, I'm disappointed that we never renewed our line of credit because to me, that's just a comfort zone. You understand, knowing that there's something
No.
sitting there, and you guys have great rates and everything.
So Kathy, just one thing. Didn't renew it because we didn't like the rates that they were
Oh, okay,
proposing.
got it.
No, that wasn't it. The line that was proposed, what was with our former bank before First Service Residential, it was a South State Bank, which we pull everything out of there when we put First Service because they did not work with First Service in terms of depositing the assessment. So we could not renew because what they wanted, we couldn't provide.
Right. So
but the reality is the first time we started discussing this, the fees were just ridiculous.
Yeah, no problem. But my whole point is that at the end of the day, Playa del Sol is a business, okay? And most businesses don't not have a line of credit there, okay, for those things. So I think it's just very important that it's in place,
Agreed. And I guess the further question is 2 million enough?
Exactly.
Considering that our risk is 6 million.
Correct.
That's Sandra.
The likelihood of having that much in damages is very low, but I'm just throwing that out there.
And
But
also,
does it cost us? I have a question about that, Sandra. Sorry, it's Todd Brown. Does it cost more money?
Yes.
To get a higher line of credit?
There's going to be on the doc stamps. The doc stamps are 0.007. So if it's right now it's about 2,500 for 2 million. So it would cost a bit more money, and I don't know what they would require also. And that's a question we can put for Jordan. We can go to 2 million and say, hey, if we wanted 4, what would how different would it be? It would definitely cost another 2,500 in the doc stamps. That's a per million. So
yeah, I'm sure they will want collateral that covers the 4 million.
Correct.
I mean, the question, we said we want to use this line of credit in case of a hurricane in order to be able to get construction immediately to start work while we do a special assessment to collect money from the owners to start paying for it. So we probably need to estimate it takes a month or so to start getting things done, getting approvals. The question is, how long does it take us to get a special assessment and start collecting money in order to do the repairs. So, I mean, it's great to have large lines of credit, but at the end of the day, they cost money and they cost interest, and the idea is for a short. So, I mean, if we're really concerned about hurricane damage, then the other option we have is to go to 3 million deductible instead of 6.
Correct.
And then take a line of credit of 2 million. And then the risk we have is only 1 million, which is very manageable.
Correct. Agreed.
I wouldn't do it with line of credits.
I guess you have to do a cost benefit analysis. And I follow everything you're saying, Katina, and you make some really good points. The question is, how much does it cost? Is it 6 on one hand, half dozen on the other, or is there a significant savings to reduce the deductible?
Well, it was 36,000. It was not a lot.
No, it was 115,000 to get down from 5% to 3%.
3%.
But you make a good point there, Todd, because if the line of credit additional amounts cost, the insurance premium is gone. It's 115,000 a year to get that extra 2%. If you get a higher line of credit and it's costing you 10,000 more, and to have 4 million instead of, so then.
Well, the line of credit doesn't cost as much. It's the assessment fee and then very small annual fee, and we have a collateral. So line of credit does not cost much. The issue is if we think we're going to have a risk,
if we have an actual
the 3 million the insurance pays for, and if we have a line of credit, the owners pay for. So that's the big difference.
Well, I would just say this: you can't insure against every potential possibility. What you want to insure against is probabilities and likelihood. Yeah. So for both, should you get a more line of credit, or should you get more insurance, or should you keep it as is? You can't preclude every single risk. It gets expensive to do that. So you guys should think about what's the history, what's the cost, and maybe make a recommendation to the board, because I think we understand that we can't plug every little single hole. It would get expensive.
Yeah.
Hey, Mike, can I, since it is owner comment here, can I just throw something out? It sounds like everybody's on the same page, that we should move forward, send an email to the board and pass some resolution to try to give Barbara some talk for a reserve study.
Yep.
What I would suggest is we actually have a vulnerability study that gives out recurrence intervals and costs. And if you look at our vulnerability study, I'd be happy to go through this with you offline, but they really don't project $6 million losses for our facility. Yeah. So I would suggest we move on to the reserve study, but offline, Mike, there are a whole bunch of issues that I'm wondering if maybe Mike and Heskey and whoever's interested might want to talk to me in a separate forum, because I think what Todd is saying about how we manage risk really does need a second look, because I've looked at that glass policy and I'm still bewildered with it. I don't want to talk about it now. So as I say, I think we move forward with the reserve study, but to attenuate how much the line of credit is, I really suggest you look at the risk vulnerability study, and I would be happy to translate that for you guys. Thank you.
Okay, well, no, let's move forward. I mean, at the end of the day, this is risk management.
Correct.
The line of credit, the insurance is.
It is, and we don't
Those are elements and part of
overspend.
it, but this takes. Let's start by getting a line of credit. Running a couple of scenarios as well, so we have a couple of choices, and then we can tweak that as we go forward. And
can I ask one other question, Mike? Pardon? Can I ask one more question about the line of credit? Because I'm not a banker, I don't understand, I'm not a finance guy, but let's say we had a big disaster and we're looking at a $6 million deductible and we only have a $2 million line of credit, how hard is it to expand the credit at the time we need it? Assuming we need it at some point. I mean, do we have to pay all those fees to carry a higher line of credit? Or if disaster strikes, can't we say, all right, we only have 2 million, we need a few more. Can we increase our line of credit at the time of need?
Yeah, I'm not an expert in this area, so
And
Sandra and Katina, I think you guys are. So.
in my experience, when crisis strikes, the banks become very conservative and
Right.
they can also pull line of credits. I've seen it in 2008. So line of credits are not guaranteed. The banks can pull it. So no, the chances are banks are not going to lend you money during the crisis. However, we are going to have the special assessment. So and that's what's going to generate the money to fix the building. I think it's going to be very difficult to get loans from the bank. That's my past experience.
Agree.
One thing we got to remember too on a special assessment is the amount of time it's going to take to collect $4 million, because I don't think we would be able to get away with everybody makes one payment only on the special assessment to collect 4 million. It's going to have to be broken up through a period of time.
Okay, listen, now we can discuss this for hours. At this point, it's a discussion around risk management. We got to continue that discussion.
Yeah.
But let's move on to this agenda. There's 15
And Mike,
minutes.
real quick, but one thing is, if we do have a big disaster, like a $6 million deductible, we'd probably be eligible for the SBA low interest
Well,
loans through FEMA.
I was just gonna say, Brooke, there must be other programs in cases of a
Exactly. So the
significant
2
disaster.
million would bridge us over to get things started. The contractors are generally going to give you 30 to 45 days to pay, and then we'll begin to, and then you can go with the FEMA SBA loan.
Yeah.
Listen, of all the hurricanes we've had in Florida, we've yet to have a significant damage, right? So let's not get carried away either.
Right, but
Okay, but it's risk. All right, so the last item on the agenda is the way forward on the reserve study. So Barbara, did you want to say a few comments before we hand it off to Scott to tell us where he's at?
I have nothing further. I just know that as of today, Falcon's in the building. And I asked Scott how many days they'll be here, and he said 2 days. So we should be on schedule to get our report within 6 weeks, within our goal, and to get a rough draft, and so that we can sit down and talk to them about it.
That'd be great, because then we should schedule then a workshop with the board and a town hall meeting with the owners.
Right.
So, and it's great that, if we can meet these 6 weeks, that'll give me an idea on when it's going to happen, and then I'll make it a point to be in at PDS. But the more advanced notice, the better for everybody, I think.
And is that something that you can follow up with the person at Falcon that you deal with, and just ask them once they come back, from the building, then what's the anticipated date of delivery of a rough draft?
Yeah, so I spoke with the guy for about 45 minutes this morning in my office, and he said it generally takes about 4 to 6 weeks for them to produce the first draft. And I made sure that he was aware that the first draft isn't going to be something that's just reviewed between me and him, that we have an insurance and finance committee, and the review is going to be with, the whole committee. And he was, perfectly acceptable with that, and didn't have any issues. And I did see him later in the day, and he was going through his camera, and he literally, on this first day, he literally took over 1,000 photos of just everything, in the building. So not saying there's going to be 1,000 photos in the reserve study, because they'll pick and choose what to put in there, but it's not, they're not just skimming over things. They're, seems like they're diving into it pretty good.
So was he an engineer? Was he a
Yeah, the guy here today was a structural engineer.
all right, good.
Mechanical comes in tomorrow, or do you know?
Yeah, and MEP should be, yes.
Okay, so we signed the contract, the project has started. The delay, the timing, sorry, not delay, timing is 4 to 6 weeks. It's pretty much what they put in their proposal, Barbara, right?
Right, exactly.
All right, so, and Scott, I guess you're getting Rodney involved as well?
Yeah, Rodney was walking with them most of the day
Excellent.
today.
Okay, well, that's what we said, guys. We said we have to take more ownership of the process. We have to lead the consultants, not them lead us. And with Scott and Rodney, I have full confidence that that's going to happen. And, you know, there were concerns on their capability to deliver. We'll be on top of these guys and make sure they deliver.
Yep.
Uh, I don't have anything else to add. Any comments or questions from the owners?
Yeah, this is Brooke. On the reserve study, is the contract on Building Link?
I'm unsure, Brooke, but if it's not, I can have it on there before I leave today.
So one of my big concerns is that, this reserve study is as usable as possible over the life of our use of it. So has anyone talked to them about quantifying having the estimate with quantified unit costs as opposed to using lump sums or internal databases?
Bruce, I'm sorry, Brooke, it's Todd. I don't know what you just said. Can you dumb that down?
Sure. Our old reserve study used a lot of lump sums and said like furniture and stuff for the lobby remodel, lump sum 1.2 million, as opposed to having line items that said, so many square feet of 2 foot by 2 foot ceiling tile at this dollars per square foot, and so many square foot of carpet, yada, yada, yada. Has anyone, and the other thing that the other reserve study did that's a poor estimating process is they cited internal databases. And as I say, if they can give us like a unit cost, this many square feet of ceiling tile that's 2 foot by 2 foot, whatever, then we have visibility as to what that number represents. And if we want to change it, like let's say we want to go from standard ceiling tile to plank ceiling tile, it's a lot easier for us to call someone and say, hey, can you give us the unit cost for plank ceiling tile? And similarly, if they use things like RS Means, which is a national database, or at least tell us what database they're getting from, because you're going to get like if they have an internal database and it's weighed, well, first off, Falcon, I believe, is only located in Central Florida. So we
Brooke, I don't mean to interrupt you, but I think we all get it now. Maybe Barbara can answer the question. Barbara, do you know?
I just saw a report that they had, and I sent it to the committee. I was in a building reviewing all their financials, and it was pretty detailed. I think that Brooke's point is well taken, because if we tell them that we, have an expectation that Brooke was on the non-Sears side when he was talking about the tiles and the furniture, and I've seen the reports where they're very detailed in all these line items. And so that's a conversation, Scott, that I can have with you, or you can just have with them to say that, we do want the detail so that they're not just saying lobby area furniture. I saw where they broke down in the kitchen, for example, one of the buildings I was at, where they line item everything from the kitchen to the bar top to everything. And, they know where he's getting the quantifying part of the unit prices. What he is really looking at is to see, I'm sure they use a number, but he's wanting to see each category number. I saw, I'm going to use an example. I saw a number float by for carpet, 1.5 million. I sat and I looked at that number and I said, where did that number come from? What is the measurement? How many floors? And what type and what quality of carpet are they using? Like
Yeah.
that was the question I was asking when I saw it in a report that was prepared for us a while ago. And so, you can't, after what we've been through with association reserves and having a plain Jane type of reserve study, they have the ability, because they're walking through the building, and as you just said, took 1,000 pictures. When it comes to the non-Sears side, we have everything they can take a photograph of, right? And so, and if you tell them, the example of what Brooke was saying, I think it was well stated that, this is what we're looking for, the measurements and, and how, like, I'm looking at the ceiling tiles right now. How many ceiling tiles in each room would they need? I had a question in that light.
So can we just wrap that up first, Barbara? Because
Todd,
I'm not clear what your answer was.
please hold on. So, one of the residents in our building that's on a higher floor, where the brackets are to hang the tiles. And they're walking down there, and the question was, and I don't know the answer to this, Alex was on the call a minute ago, whether or not they're going to replace these brackets because they were rusted. And so I didn't know that. I'm not on the board, so that's a question really for the board. But it's a good example because then it ties into what Brooke is saying. So in the future, if we have to do that, then we have to replace all these brackets that hold in the ceiling tiles. What's the measurement of that, and what's the unit price?
Okay. So my thoughts on this are, the more detail we have, the better. So
Mhm.
Scott just asked for it, and because how do we going to validate if it's one big giant number, right? So,
Mike, also,
but that's the point, Brooke.
Mike, can you
Thank you.
forward Barbara the email I sent you on this? It might help her. I sent it to you, Todd, and David, and Heskey, I believe. Also, Barbara, just stress it's not only on the non-Sears side, but on the Sears side where I think we got into trouble was with our HVAC systems. So they should be very clear that, like, if they're going to say an HVAC unit as a component, to say, hey, is the associated wire ring, the associated piping with that in this component, or is it in another component? Because that's the only way we're going to get true coverage. But I think it's exciting that they got 1,000 photos.
Yeah, I think it's a good start, Brooke. So listen, I want to give other owners a chance to express themselves. Thanks for that. Scott, please ask for detail. And the worst thing they can do is say no, and then we'll ask them why. So
I mean, they have to do it, you
Yeah.
would think, in order to come up with the numbers, like the per
Exactly.
square foot cost of a tile, of a carpet, of.
All right. Any other questions or comments?
We're on general discussion right now.
Just ask if anybody.
Yeah, hey, wait, Mike, we have a question in the room here.
Okay.
Just identify yourself and speak at the speaker, please.
Okay.
And tell your unit number, please.
Okay. It's Trish, 1410. How are you?
Good.
Just so I understand, like, this whole study and stuff, are they putting the stuff that we already know that they're getting ready to fix, like the risers and all that? That's not going in this report, or does that go into this report?
It has to go into
It's still,
the report,
oh, okay, I
right.
just didn't know because we already have that.
They sat down with Scott, they looked at all the contracts we have and the quotes that we have going forward on the projects we've identified. And so then Rodney takes them through the building so that they can look at everything that we just finished, the concrete
Okay.
and the roof and the elevators and everything we just did.
So that's all included in this whole report?
That's correct.
Okay, I'm not familiar with this report, that's why I wanted to ask. Thank you.
Okay. Good.
Hi,
Okay.
it's Todd. Can I chime in briefly?
Yeah, we got 5 minutes left.
Okay, I'll be real quick. In keeping with what Brooke said, my point is a little broader. I certainly agree with Brooke's point that we should have a line item and they should, articulate specifics. How many tiles, how many chairs, the whole detailed. More importantly, I'm concerned that at a board workshop or a association town hall, we have the engineer or Falcon sitting there with a look of shock on their face. when they hear all of the questions and concerns they're going to get from the board and from the association. My point is, now is the time, and I know you all know this, but I'm just saying it anyway because I'm a lawyer and I'm covering my tail. Now is the time to express to Falcon, before they really dive in, I know they're starting, that we are looking for a very robust and meaningful reserve study, because as we all know, many associations are not. In fact, many associations are looking for the least amount of potential expenses so they can reserve as cheaply as possible. So I think they need to understand our, particular association needs and requests and requirements, so they have a good understanding of the lay of the land. And now is the time to do it. So with that, I'll just thank you all for your hard work on this.
Agree. I mean, absolutely. We're not here just to check off the box and say we did a reserve study in the past 10 years or what have you.
Right.
We're here to use it as one of the elements, and I'll repeat that. It's not going to be the end all and be all, but it's going to be one of the elements that's going to help us forecast more accurate budgets and related maintenance fees.
I agree,
And
but
more
I'm
importantly,
just
that's why I stressed it, and I think I've stressed it in every meeting, that we need Rodney and Scott actively engaged and leading the parade as opposed to following, which was the case that happened in the past.
yeah, I agree. And we all know that in this room. We just need to make sure Falcon knows
Yeah.
that now, because I'm sure they've worked with many buildings that they could care less what their reserve study says.
Yeah. Agree. So
Thank you. Thank you all.
Scott, in your future discussions with them, if it hasn't already been raised, please create that awareness.
Yeah. I will.
I have a question. So on the SURS side, I mean, I think the schedule and what needs to be done each year and all that is probably easier to determine, I would think. Those are structural items, they have a life. On the non-SURS side, there are certain items that are maybe a little bit more discretionary. Is that something that at some point we should be discussing amongst ourselves in terms of timing, amount? If we're going to be redoing the hallways, is it in 2027? Is it in 2028? I mean, that's something that we probably should start having internal discussions,
Yes.
so that we don't have Falcon sitting in a meeting where everybody is not on the same page. We should be on the same page.
Well, we have to make those choices and take those decisions, right? At the end of the day.
I think so. The owners.
Yeah, so that's why I'm glad Brooke brought up the detail, because then Falcon will come here and say, for the hallways, we project X number of dollars. Here's the breakdown on the components, and here's the cost per component, or the cost per unit. But at the end of the day, you can spend a lot of money on embellishment and quality of the hallways, or you
Yes.
can just get by. So, and that's something that nobody can tell you. It's like renovating your home. You can spend 50,000 for a kitchen, or you can spend 20,000.
Agreed.
So there has to be a process there, and I don't think we've actually had those discussions or decisions at this point. But I would anticipate that once we get the reserve study, then we have to vet it, the finance committee, go through it and we're probably going to send Falcon back and say, hey, guys, you have to come back and look at this, look at that, before we engage the board, or, and certainly not, and the owners in a more detailed discussion.
So you kind of want to see a first pass. What are they coming up with? And then review.
Yeah, we're not going to have a group review with so many people. That's totally unproductive. So there should be a few reviews of this by different stakeholders.
But Mike, we can give them the heads up on, what we do expect on the non-SEER side.
Yes.
The need bones connected.
We should give them whatever we know, but what we don't know, like, I don't know, as an owner, I don't know what we have in mind for the hallways at this point.
But it's something that's coming up in 2 or 3 years. I don't know well, do we even know the timing? I guess that's my
Yeah.
question, because we're expecting Falcon to do a study, but who's going to help them with, I mean, to me, that's that's a large item, the hallways, which we should have some kind of ideas. What year are we planning to do this?
Always,
You have to remember that the idea of a workshop with the board was there were a few reasons behind it. One was to review the reserve study, but the other one was to make some choices or just start discussing some of the alternatives, right?
Right.
And then, you look at the hallways and you talk about sequence. Well, the logical sequence would be that after the sprinklers are done, we renovate the hallways. But I don't know if that's practical. I don't know if we have the money or what have you. And then we have to slot things in, right?
but
After
Mike,
the
the
risers,
hallways for the risers.
so we have to wait after the risers.
We have to wait for the risers because we're bringing up those ACs and, fixing the risers on the inside of the box. So they'll probably set, there's going to be work. So, in those hallways. So in my estimation, I think it would be prudent of us to wait until after we're done with those risers.
Yes.
Okay, but there could be a lot of interdependencies from a lot of different things. So
Can I make
Yeah, go
one
ahead,
comment? Okay. In a board meeting or when we have a town hall meeting, we could have 200 people, 300 people participate. In my experience, you don't put a supplier in front of 300 people and have them ask questions. What we should think about doing is getting the report, maybe sending it out or putting it on the website. Then if we're going to have an open town hall, we should have questions sent ahead of time so we can answer them. There's no possible way we can have Falcon show up blindsided and be bombarded with questions. So if we're going to do this, we need to think about how we're going to do it to make sure we have the right information for the owners and we don't blindside Falcon.
Agreed.
No, absolutely, Katina. I mean, I don't even think, honestly, Falcon should be at the town hall. I think the board should take ownership. We should take ownership, review
Agreed.
it, and then if there's anything we need from the owners, it's subject to vote.
Well,
Right.
and if we don't know the answers to those questions, we can take them down, research them, and then get back.
Because to me, a town hall is an information session. It's not
Right.
it's not a decision-making body.
Correct.
And then
We should be done by then. I mean, once we get the first draft, there's probably going to be
Yep.
changes made as a result of the first draft.
Yes.
And maybe that's from review by us and maybe the board, and get it to a stage where we're all comfortable with it. And then you can
Absolutely.
present it in a town hall and take questions.
right.
Can I just chime in?
Katina's suggestion that we take questions in advance maybe and give them an opportunity
That's a
to
good,
review.
yeah.
So
I
there's a
think
lot of possibilities here.
I think we're still in like owner chat. Can I just comment about two things? One, I totally agree with Katina. Questions should be sent in advance. But also, if we're going to have a town hall, and I heard you say, Mike, the board should take ownership. I don't have confidence that the board is qualified to lead a town hall about a reserve study that a vendor. There will be items that we just are not qualified to discuss and don't understand. So we don't need to have this, we don't need to have owners, harassing the vendor, but I think it's not, I don't think it would be an effective town hall if it was just the board members, some of whom know nothing about reserve studies, and they're not going to know more just by reading this.
So Todd, I say,
So I would say,
when I say the owner,
I would say that a town hall would look.
Oops.
Sorry.
Yeah, so now, Todd, I would say when I
Hello?
say the board should take ownership, they should come up with a strategy and buy into the strategy. How we deliver the communication around that strategy doesn't have to be just the board. It be-
Oh, I see what you're saying.
Yeah,
Okay, yeah.
It could be complemented by experts, but depending on what we want to present, could be complemented by finance and insurance committee members or what have you. So to me, when I say the board should
Yeah,
take
I'm,
ownership, they should definitely take approve the strategy.
right. I mean, it's
And to
pretty
me, the
much,
and
town,
when you say
sorry,
strategy, you're talking about this,
the town hall is more
you're talking
than
about the
just,
strategy for the town hall.
no, the strategy for the building.
right, because it's really, in 2027, we're gonna do the risers and we're gonna do the cooling towers, and it's gonna be 5 million. In
When you
2028,
when
I
you
mean,
say the
that's really,
strategy, are you talking about what is the strategy for raising the money? Or what is the strategy for planning projects? I'm
The
not
time-
following you.
The
Plan
timeline on the projects.
planning projects.
So the timing of the reserve study is not going to give you the timing of the project.
Oh, I
So-
understand
Yeah,
that.
no.
I understand that.
Okay,
That's obvious.
So we have to come up with that, right?
I'm sorry. There's too many conversations going on. I wasn't on the same page. I get it now. I get it. Thank you.
All right,
But-
so we come up with the strategy and say, hey, guys, this is where we're looking. This is what it's going to mean financially. This is what it's going to mean operationally over the next 3 years. And the sequence, like Barbara says, there has to be a sequence of events. What happens first? What happens second, and so on. So once we have that, then
Yeah, no, I get that.
Yeah.
My whole point was I think we need the vendor present at a board workshop and a town hall. Even if we lay some ground rules out, we ask them to make a presentation, an overview. We have pre-submitted questions, but I just wouldn't feel comfortable taking people's time to have a town hall and not have the vendor there.
No, she
Yeah,
said to have
we should, the board should approve the blueprint. And then the execution of that is, and then the presentation of that, I should say rather, is going to be complemented by experts who can address owner questions or inquiries. Same with the board. So,
Perfect.
all right, I think we've run out of time, but it's been a worthwhile discussion.
All right. Thank you, everyone. You guys have a great day. I have to sign off. Thanks again.
Thank you. Bye-bye.
Thanks, everyone.
Thanks.
Thanks.
Bye, guys. Thank you for all your hard work.
Thank you, Kathy.